A secure financial future is to have a life free from financial struggles, where you can live with great satisfaction, joy, and never have to worry about money. Everyone desires this kind of life, but unfortunately, not everyone works towards achieving it. Life has been programmed to work by principles and laws. Not until you take heed to those principles and laws, you won't have your desired future. The same goes for your finances. Money comes to those who obey the principles and laws of money. Your background, culture, age, religion, and origin are not a criterion for these principles and laws to work for you. It may interest you to know that if you must have a secured financial future, begin now to think of the future. There is a popular saying, "A stitch in time saves 9." Perhaps you feel bad that you're yet to start working towards it. It's never too late to start. Therefore, I would like to guide you through some proven and practical rules to secure your financial future. So, let's get started. Set a financial goal. Setting a financial goal is a very crucial rule you must abide by if you want to secure your financial future. It implies having a target of how much you would want to save up, probably yearly or monthly, as the case may be. It could be long-term or short-term. This goal must be specific, time-bound, measurable, and attainable. One thing I must not forget to say is that you must ensure to write down your financial goal. Knowing it in your heart is not enough. A written financial goal puts pressure on you and makes you against all odds to try achieving them. For example, you may have a target of saving up to $5,000 in 2 years. Then you may want to employ setting aside $200 monthly, depending on your income, to achieve that goal. However, before you resolve how much you want to save and channel toward your financial goal, you need to look into your monthly expenses. The act of setting financial goals helps you review and cut unnecessary expenses. However, it takes discipline to keep up with your financial goals. A disciplinary measure you can take to meet your financial goal is to open a separate bank account for your savings. Don't use your day-to-day bank account because you might be tempted to spend it another way. You may decide not to collect the amount's debit card to avoid urgent demands and money transfers. Better still, make do with automatic debit transfers from your day-to-day bank account to the savings account. It's advisable that you start with setting short-term financial goals and gradually work towards long-term financial commitment after accomplishing the short-term goals. Think about long-term investments. Money saved in the bank does not appreciate with time. Instead, it depreciates. Alternatively, investment is a sure means to grow your money. Investment is the dedication of money to purchase an asset to attain or increase in value over a while. This mechanism enhances future financial security. The aim of investing is to generate more income. To secure your finance, you must be open to investing in a variety of opportunities, such as stocks, real estate, commodities, cryptocurrencies, bonds, and much more. Investment can be considered also as purchasing a property that can be used to produce goods. The reason for investing in multiple opportunities is to ensure that if one venture fails, others can provide an income. However, you must decipher your financial goals and align your investment plans accordingly after thorough research. Do not be in a hurry to invest. Take caution so that you won't lose your money. Among many other things investments does, it grows your wealth, provides you with another source of income, funds your retirement, and even rescue you from financial struggles. So the main goal of investing is to make your money work for you and not to work for money. The truth is that you can never go wrong with investing. Every great person has an investment plan. Since saving in a bank cannot give any value to your money, it is wise to consider the right investment plan for your money. Save by spending wisely. Most people try to find reasons why they cannot afford to save. Don't become one of them. They always complain about a small income or costly bills and other responsibilities that will not allow them to save. But you don't need to wait till when everything falls in place. You're not obliged to start saving a huge sum of money. You can start little and progressively increase your savings. The challenge is not in how much or how little you earn, but how much or how little you spend. If you receive $500,000 monthly and spend as much, then you will never be able to secure your financial future. Unfortunately, our society is consumption-oriented. What enhances your financial freedom is not how much you receive, but rather how much you can set aside. To the extent you can reduce your expenses, you will be able to secure your financial future. Interestingly, people tend to spend more than they earn. If you imbibe this culture now, you will comfortably save more when you make more. If you resolve to save from the amount you would have spent on unnecessary items, you will discover that you could immensely contribute towards your financial future. Some people spend excess money on expensive outfits, expensive restaurants, tech gadgets, first-class transportation, and the like. There is a long list of unnecessary expenditures people waste money on daily. We can all save $2 to $10 daily simply by cutting non-compulsory daily expenditures. A daily cup of coffee could cost $2 or more, and a sandwich to go with that costs additional $2. A bottle of soda drink could be another $2 to $3. If you sum them up, it could total up to a huge sum of money per month, and much more each year. What would happen if you put that same money into an account yielding a 10% annual return? In 40 years, we could earn close to $1 million. Savings can add up dramatically. To be honest, this entails delayed gratification. Get your finance covered and secured. Getting your finance covered is a very vital rule to consider, but a lot of people neglect it. There are several ways you can protect your finance. First is insurance coverage. Insurance is a medium to reduce the financial impact of unforeseen events. Having insurance in place and ensuring they cover the right things should something unexpected happen is something everyone who seeks future financial security should imbibe. Nobody likes to think disasters such as floods, fire outbreaks, tornadoes, theft, and hurricanes will occur, but sometimes they do occur. This is why it is crucial to ensure you have insurance in place. Ensure to always review your contract carefully. If you own property, ensure you have the appropriate homeowner's insurance and renter's insurance if necessary. Interestingly, a lot of people skip this, but you must understand that having it protects you from potential catastrophes that can pose a danger to your best-laid financial plans. The second is to keep records of your finance and investments. Financial documents can be easily misplaced. You can avoid this by creating a financial file or record where every relevant document can be kept. When keeping financial records, ensure to keep any records that affect your finances, which include payments you make on a yearly or monthly basis, a list of your investments, etc. The world has gone digital, which keeps advancing daily. You may prefer to use digital devices to safeguard your financial documents. You can also consider using a hard drive that can be kept in a safe. Have multiple streams of income. Multiple streams of income entail having different sources of income, which increases your daily, monthly, or yearly savings. Simply put, more income streams equal more financial security. Relying on one job your entire livelihood is not safe, with layoffs and pay cuts always right around the corner. With multiple streams of income, you can avoid putting all your eggs in one basket and use several streams of cash to grow your income. A second job is a good way to start. This could mean taking a part-time job. This is particularly popular among younger people who may pick up hours in the service or retail sectors on the side. For many, side work today means app-based gig employment. A good number of Americans who can't find more stable jobs rely on low-paying, unstable work for their primary income. Surprisingly, most wealthy folks never had one stream of income. If your quest is for a secure financial future and think several income streams sound better than one, here are some major places you may want to consider. Passive income. This means earning income from external sources without your further involvement. For example, many writers generate royalties from their published books. Money comes in regardless, they don't do anything much. Business income. This is a kind of employment, but not quite. It is related to contract work. Business income is the money you make by running your own business, more especially by offering products and services to interested customers. Invested income. This is an income you make from your investment portfolio. This can refer to dividends, capital gains, and even the profits from a business you may have invested in. In general, it entails making money by managing your investments. Consider a retirement plan. A retirement plan is particularly important to help you maintain a stable financial life and help eliminate stress in old age. The painful truth of life is that you can't work forever. Having this understanding will help you prepare for your future in old age ahead of time. Let us consider this instance. If you are 30 years of age now and aim to retire at 60 years, it means you have only 30 years to plan for your retirement. However, no matter how long you decide to work in life, you can never work forever or till you drop dead, which is one of the reasons a retirement plan is crucial. Having a retirement plan gives you a more secure future in old age, since your future is not guaranteed. Once you have a retirement plan, kindly stick to it and kill the urge and temptation to dip into your retirement savings or crash your retirement plan. A retirement plan is not just all about saving money, but about investing rightly. Saving money is important especially if you do not have an employer-sponsored retirement plan, but beyond savings, investing is a better backup plan. Another point to note is that an average worker may not be able to save enough cash to sustain his or her plans. Therefore, it is important to consider other options. In a bid to make retirement plans, be sure to keep some things in mind. Look for plans that provide regular income. Look also for investments with less risk and search for investments that give you full guaranteed returns. And consider the period of vesting. Vesting age is simply the age you start receiving income from your retirement plan or investment. If you wish to start receiving your retirement income at 60, then you should consider a plan with a 60-year vesting age. Having discussed some of the rules that will help you secure your financial future, you must start doing them now if you truly desire financial freedom in your lifetime. Interestingly, a lot of people know or have read what they need to do to secure their financial future. But I have discovered that their biggest challenge is the fear of failure. You should understand that most people who succeeded in their quest for a secure financial future failed at some point. But their failure didn't stop them. Why? Because their failure became their strength in that they learned from their failure regarding what they didn't do well and started again. But this time, they engaged those things they learned and therefore succeeded. If you try and fail, try and try again. The biggest failure is not starting at all. Thanks for watching!